the probabilities of us being right are very high. There's no guarantee on
Yeah.
anything in life. But I think that's why if you can have a low time preference, this is like Jeremy Grantham up here in Boston, another guy I admire a
Hmm.
lot. As he has said, the great fortunes are made in commodities investing. And the reason why is because if you can take an 8 to 10 year view and ride a cycle out and ride those tailwinds, your average working stiff money manager at a mutual fund cannot do that. They have to worry about next quarter's
Quarter to
returns.
quarter. Yeah.
They're high time preference. They
Hmm.
cannot be low time preference. If we and our customers can be patient and are willing to ride that cycle, great fortunes can be made over time, we believe. And I think the probability of us being right, again, over 5 to 8 years is very, very, very high. I think even perhaps sooner, but I don't want to guarantee that. I think you got to learn patience.
We want to thank our sponsor. This show is brought to you by Bitcoin Trading Cards, an orange pill in a pack, making talking about things that normally make you want to cry fun and easy. The scarcest cards on the entire planet. Available now.
I feel grateful and honored today to present to you a true playable character in this sea of non-playable characters. A remarkable person who heads up and co-mans the Bitcoin Opportunity Fund, Mr. David Foley, with James Lavish, and many of the advisors that you might know in the Bitcoin space. Just an incredibly smart man who has an awesome story to Bitcoin, and just a breadth of knowledge that he shares here today. His thoughts on the debt that we are careening out of control here in America, how this is going to roll over, when might we hit 50 trillion, $100 trillion in debt, and what does that look like? We talk about selling puts and calls, and how that works and how he thinks through those things. We talk about demographics and demographics being destiny, and really telling us where we're going to end up in this game we find ourselves in. So I'm just so grateful to have Mr. David Foley here today. He's one of my favorite people in the space, one of the smartest people in the space, truly remarkable man. Please share this out. The algorithm hates truth. I give to you Mr. David Foley. Enjoy.
Mr. David Foley, thank you so much for joining me today here. I always trying to find playable characters, as I say in the intro and the outro and everything, in a sea of non-playable characters. And you're one of my favorite people in the space, one of the great thinkers out there leading the charge. So I appreciate you coming on here, David.
No, thanks for having me, Brandon. My pleasure. But you're too kind. To me, I'm still learning from you and everyone else I talk to.
Okay, I think the crazy part is, which is where I kind of want to start, is just kind of your story. We all have, I think that's what's so amazing about Bitcoin in general, the sound money space. I kind of started like in political hockey world and stuff like that. And then eventually went to gold and silver, which is something I know you know a lot about as well. And then eventually went to Bitcoin. So that's kind of, very long story short, my journey and my progression, my path. And a lot of Bitcoiners have similar type of paths, but I want to kind of start with your story and how you kind of got that. Because again, the Bitcoin space is amazing because of the journeys where people have all come from to get to this place. None of us woke up being a genius and just having this epiphany of, hey, Bitcoin is the thing we think can help the world, but we all had to like get there somehow, run the gauntlet, make mistakes, feel pain in order to get here. So I would love for you to kind of share, that path for you and maybe the mistakes along the way, and how you've led to where you are today.
Yeah, no, it's a great question. It's funny. I'm part of a mentor mentee program at my graduate school alma mater, and a woman yesterday that I did a call with was asking me that similar type question, like how'd you end up in Bitcoin at this point in your life? And part of me was like, God, I can't believe I'm 22 years out of business school and I'm now a mentor. I felt like an old man at that point, but it's funny. It kind of like a light bulb went off in my head that there's a whole breadcrumb of things that led to us to these points. And to your point, all of us in our lives are going to look back. And I think the older you get, like I'm 50 now, and the older you get, you really do get more reflective on that. And to me, I'll try and do this quickly. I was a kid growing up, middle class kid outside of Boston, and my grandfather, used to. I was the youngest of four, and my mom was the youngest of four in her family. So I would be babysat by my 85-year-old grandfather a lot when I was a kid.
Wow.
And he was a fascinating guy. He was brilliant. He would taught himself how to speak French in retirement, for instance. He had many businesses during the 1920s. He had like 7 businesses, and my grandmother was his secretary and about 8 years younger than him.
Wow.
So it was like controversial when they got married, as the story was told to me. His family thought she was a flapper, and
Wow.
but he had car dealerships. He had all sorts of stuff. He was a very successful businessman in the 1920s, and somewhere along the way, I'm guessing 29 through 32, all of it went south.
Wow.
He ended up joining the postal service, and kind of wanted a steadier life, probably to take care of his 4 kids. So as I get to 50 now, you reflect on these things and you say, yeah, you do what you can to take care of your family. And in any event, I bring him up because I would lay on his bed when I was like 4 or 5 years old, and I'd be sick, and my mom had to work, and she'd bring me up to my grandparents, and I'd lay in his bed, and he'd listen to the stock market report at noon, and I'd just watch him reading the Wall Street Journal, and I would ask him about the markets. And so that's how I got involved in finance. That's how I learned about kind of value. And I don't know if I was born that way, but I was also the kid that would go to the arcades, and the only game that was worth paying for was the USA versus USSR bubble hockey game, right? That was the only one I'd pay up for. But like everything else,
That's
like
classic.
Pac-Man, it was like, no. And I remember my buddy saying to me, why are you saving all your money there? Well, it's your mom's money. Just spend it. Like, and I said, no. Like, don't you understand value? Like, no, like, again, USA hockey was the only one he played. But where I bring that up is I think for me, I was always a value bent and a fairness bent. And I learned a lot from my granddad. And I was just an observant, curious kid as the youngest of 4 that was curious about the world. I would always have my older siblings, friends saying, why do you ask so many questions? And I just curious. So my career path then went toward banking down in New York after business school and before business school. I ended up in the hedge fund world about 19 years ago, 20 years ago. Um, first at a growth equity firm, and then I ended up at a distressed debt value equity shop for about I don't know, 13 years, and that's where I kind of really, I'd say, it kind of shaped in my skills as what I would call a value investor. And somewhere in 2020, I joined Larry Lepard. Larry's my brother-in-law. He's married to my oldest sister, and he and I had always talked for years about syncing up, and COVID was just the right time. And I saw kind of the light of, yeah, geez, Larry's right. And Larry used to talk to me about Bitcoin back in 2013 or 15, and I would debate against him and say, nah, I don't see it. I think gold.
Wow.
Boy, I wish I listened to him earlier than I did, but as we all know, everyone has that period where they deny it and then they see it. And that's just my process of how I decipher things. I always watch downside as a value investor, and then I saw it. It became clear to me that Bitcoin is digital gold. It's the most scarce asset. It doesn't respond to price. It's just a decentralized protocol. And so that all resonated with me. And when you see where the puck's going, this resonated with me. Like, this is going to be a big space over the many years to come. And so I'll pause there. Now I'm involved with Larry at EMA, and we've also, James Lavish and I have started the Bitcoin Opportunity Fund, and we are investing both in public and private investments in the Bitcoin space. So without being long-winded, I'll pause there.
No, that's perfect. And I don't know if everyone knows all those backstories. I'm sure there's a lot of people that have heard of the Bitcoin Opportunity Fund now at this point. Wait, really quick, I guess, I was going to bring that up later. We can kind of talk about it now a bit, but that started about a year ago, correct? Kind of maybe unravel that for us and kind of what's going on there and how you guys are looking at things I'll circle back around to some of what you said, but you brought it up, so I figure we'll go with it.
So we did our first close about 6 months ago in June, and we began investing money. We're continuing to invest money. The fund's open through about Q1 of 2024 to accredited investors only. We have had a good run here in the first 5-6 months since investing. We've invested in a lot of the public stuff, did some options trading strategies, have made some money on portfolio hedges. We've done a lot of private investments. I won't go into all of them, but we've done about a handful of private investments. So we've invested about 24% of our capital so far. Again, we're continuing to raise money, and we're up about 17% area on the year. So we're happy pleased with the start. and that's obviously marking our privates at cost, but on the public side, we've kind of made those gains.
Hey, really quick, I want to annoy the hell out of you with a quick little break to just remind you that we have to share the signal within the noise because the algorithms hate truth. The algorithm hates truth. So we have to do all that we can to spread the signal. The faster we do that, the quicker change comes to the world. We need to be the change we seek to be. What are we doing? What am I doing? What are you doing to build a future? Also, if you want a written version of a lot of what we do here, please go to the description and find the link to our blog, our Substack, as well as you will see many links to either the work or the companies, the places you can find all the playable characters here that we talk to and how you can connect with them. So now back to the show. Thank you.
So we're excited about what we see as great opportunities in what we think will be a lot of increasingly more public companies in the space over the next 3 years. We think the IPO window will really open that up a lot, kind of like internet IPO market opened around 97, 98. And we think that will happen, and we think there's just a lot of great private companies out there that we're finding, and so yeah, I mean it's kind of exciting to us with what's going on and where this is going, where Bitcoin will be, the soundest form of money in the world as a store of value, but then the blockchain Bitcoin technology protocol on top of TCP/IP, where you're just basically transferring in a better, faster, cheaper way value of or money, right? And the way you and I now are. Like, I think to me, the Bitcoin protocol in my simple mind thinks of like the VoIP market, voice over IP. It would be something people talked about in 99, but it took time for the pipes to get bigger. And now here we are in a Zoom world where you and I are Zooming video over the IP protocol. I think that will be like the blockchain Bitcoin technology layer where we eventually will be, you'll see Gresham's law kick in, more and more money will flow to this space as a store of value, and then there will be transactional natures and aspects of the blockchain. So to us, this is a lot like the internet of the 90s, and this is going to be a very interesting space over the next decade.
How do you, and I want to remember this, I want to ask you this in a second, but about kind of how you see this transition actually from fiat to Bitcoin. I think that's a very interesting space. I did a video about this and tweeted it out a couple of weeks ago, and it went way more viral than a general post I'll make. But it was about like what does the future look like when fiat is destroyed, basically? Like how is Bitcoin coming into existence? But like, are you if you have a rental property, you're getting paid in Bitcoin, right? Like we're so used to fiat, right? And even exchanging it, that's like, hey, I'm going to sell my Bitcoin, buy a rental property with my fiat, then and exchange it, and then I'll be getting paid in fiat. So I'd love to get your thoughts on that in a minute, kind of what that looks like, that universe. But Jeff Booth always talks about ego death capital, right? In what he's working on. And he always is talking about the companies he's seeing. How similar of a fund is it? The funds that you have, the Bitcoin Opportunity Fund, is it a similar fund to ego death and what Jeff is seeing? Because Jeff has always talked about, well, the companies I'm seeing, they look amazing. If you saw what I saw, you'd be all in. How similar or different are the funds you guys are running? Are you guys seeing companies like that? How are you investing, I guess, right now compared to what they're doing? It seems like they're way out on the curve, the bleeding edge, it seems. And how is that different or similar to what you guys are doing?
Yeah, I'd say it's like a Venn diagram. There's definitely overlap.
Mm-hmm.
We've definitely, and again, I'm an investor in Ego Death and in 1031, which are two of the prominent.
Oh, good point. Yeah. Yeah.
And so we traffic with a lot of stuff they're doing. Like we just invested in Anchor Watch, which is a Bitcoin property and casualty insurance business. 1031 also was in on that one.
Mm-hmm.
I know EcoDef and us have looked at a couple of similar companies here recently. So we are doing some of that overlap with them. I think the difference with us is that we will be doing some of that VC. We'll be doing that VC as well. But we're kind of looking to diversify more, right? Where we're not going to have big concentrated bets in any one name. And two, we're going to try and take advantage of the public sector as well, right? Not only with like buying MicroStrategy. I think we bought that at 282 back in June. We've done some options trading strategies around it, right? Writing calls where we would sell MicroStrategy, or writing puts where we would buy more of it down at lower levels. So we're able to kind of harvest some of the volatility, vol capture trading, we call that, around it. Secondly, we also can do portfolio hedging, right? So we had a really nice profits from the September through October period when markets were declining. So we're able to take advantage of that and do some hedging as well. So we're trying to just get the most optimal risk-adjusted return. We might leave some, a home run on the table, but if we're kind of hitting doubles and triples and singles, that to us is just about on base percentage and just kind of good, steady risk-adjusted returns is what we're trying to do in the space.
Which I feel like really fits into a lot of the Bitcoiner world, right? I think the crypto world is they're trying to hit grand slams or they're trying to get 6 runs on every swing, right?
Yeah, yeah,
And if you're hitting singles, doubles, and triples, more the Bitcoiner way, where you're like, hey, we just got to get on base, play some small ball, win the game. Like that's what we got to do. I'm trying to think of how to phrase it. So you guys, and this is not necessarily this is maybe more of a broad question, not necessarily a Bitcoin Opportunity Fund question, but like it's a general options question, I guess, if you will. And when you're looking at something like you yourself, if it's just David managing his own money, or whether in the past or even going forward, are you like, if you have stock on something, there's a lot of people that do, obviously, whether they have stocks or they've owned assets still that they haven't sold off yet for Bitcoin. Are you if you're writing puts or selling puts, you're trying to get in at a lower price. Obviously, you're capturing premium and also trying to get in at a lower price. When you have a stock already and you have that asset on your balance sheet, what are you generally looking for? Like, are you writing calls? Are you trying to sell calls on those all the time or some of the time? What are you kind of looking at to enable to capture premium income when you have that asset as well? I think that's a really interesting thing because so many people in the world, they think of buying options and buying calls, where, as you know, selling is where the big boys play on either side of that spectrum. So what do you look at when you're selling? I got even selling puts, but also when you're selling calls, I have the asset and I'm going to sell calls on it to capture premium there as well.
Yeah, like I'll give you, for instance, to me, it all comes down to fair value. Like and there's a lot of things going on. Like maybe there's technical analysis too involved that we will look at and say, well, look, that stock is run really hard. Its relative strength index now is in overbought territory. Its MACD is kind of flattening out. Maybe we should go write a call 20% up away from here if the vol is amped up and we can kind of take advantage of that vol essentially. Now you got to be careful. Like I'll give you an example. Like I would not, we talked about this the other day as a team. One of our portfolio companies is writing calls on Bitcoin because they ultimately have to sell the Bitcoin to reinvest in mining machines, right? But yet they hold the Bitcoin right now that they just borrowed in debt, and they need to convert eventually to fiat to go grow their business. So that's an example where they're gonna have to sell Bitcoin. Now, if I own Bitcoin, I don't want to sell it down here. Like I think the value, fair value on Bitcoin over the next 5 years is so massively higher than here. I would never want to write a call option on that. But on a certain stock, we might want to do that based on where those technicals are, knowing that we can always come back into the stock. We can kind of wipe away the position. We might have a collar trade on. So I want to just be clear. Like, I think if you love an asset and you think this is going to grow and compound forever over the next 10 years, you don't want to be writing calls up there when it's cheap, right? And right now, to us, Bitcoin is very cheap. There are some stocks, though, that maybe get ahead of themselves from time to time, and that's where we will step in on a 3-week basis, maybe have a written call trade on a vol capture. I don't know if that makes sense.
Yeah, no, it does, and that's we could go down this road. Maybe another time we can go down the road even more. But I know there's probably many people that would be like, what in the world are you talking about? So, in saying that, we can kind of transition a little bit, just because I don't want to go too far down that rabbit hole necessarily. We were just talking about that. Oh, so in talking a little bit, transitioning a little bit, but somewhat similar vein, liquidity, obviously, I know Dr. Jasmine talking about this recently. There's many people that have been kind of looking at what's going on here. What are you seeing in that world right now? Because, like, for instance, this is why I'm thinking of this, because I think it was a tweet yesterday or a day or so ago. I just saw of him, and we were in spaces yesterday and kind of talking about it. And he was just talking about, global M2, I think US net liquidity, everything's been kind of range bound over the last I guess, what, year and a half, since April 2022. And, personally, my thought is, how, like, how in the world are they keeping, I mean, and you see the chart and it's just like, it looks like a bowling ball bumping off each bumper of the, going off the bumpers, basically back and forth, up and down. And to me, like, and I know a lot of us, because I've talked to, many people in this space, and you and many people, we've been waiting for a crash. I think this is going to crash for years. I think Robert Kiyosaki is the most famous person and gets a ton of crap for it. It's always going to crash guy, Chicken Little guy, for 10 years saying that, like, it's not. But in all seriousness, 2016 was the time I was like, okay, it's the baby boomers are 70 and a half now. They got to start pulling out. Like, things are going to get crazy. And they did, I guess, in a way. 2019, repo and all this stuff was happening. But the big question is, when is this going to just fly apart? It amazes me how much they can do to keep this on the track somehow. It just blows me away. What are your, like, grand thoughts on like, liquidity, kind of what's going on? Kind of take it wherever you want. But my big thing is, how are they keeping this on the rails? And, like, where does this go? Like, when does this fly apart? At some point it has to, David. It just has to. It's
Yeah.
like, what is going on?
So it's a great point, Brandon, and there's no doubt all of us in the world, and no matter what, from time to time, you're going to have periods where you bang your head against the wall, right? Like, for instance, I was in the hedge fund world where, in the 2000 to 2010 period, it was great to be in the hedge fund world. I would argue that a lot of hedge funds really had a grind from 2011 through 2020, where we were sitting on too much cash, we were over hedged, and the right play was to be long and strong. And David Tepper, the owner of the Carolina Panthers, probably is the one hedge fund guy, poster child, who got it right, who just said, no, you got to go long 100%, take all the risk in the world. The Fed's throwing money at the system. And he was right. He made a fortune. He owns the Carolina Panthers now, and the rest is history in his case. I think that what I've learned, therefore, over the last kind of decade and 20 years as an investor, and just studying kind of markets and having the benefit of having Larry, where Larry's taught me a lot, and other mentors I've worked for, I've learned a lot from. What I observe is the following: in trading commodities, for instance, and Bitcoin is a digital commodity and gold is a commodity. Fortunes are made if you can have an 8 to 10 year horizon, and you can have the stomach to wither the volatility. And if you can kind of look through and see these trends that we're talking about that you just laid out, like Luke Gromen, his thesis will be right, but it can take longer than you think to play out, right? So I learned this very hard in the energy space, where we were buying distressed energy assets from 2017 through 19. And we kept doing the math, and we would go back to with a calculator pencil, going through it, being like, look, at some point, the supply demand in oil is going to end up at a shortfall of oil, and demand's going to overwhelm, and prices are going to come back again. But you had to endure then COVID. We thought that would happen by 2020. Well, then COVID happened, and we had massive drawdown in oil, and oil ultimately traded for negative $38 a barrel for a month. And yet you fast forward to 2022, and we were right. It just takes longer than you want. You talk to a lot of great real estate investors. They'll tell you things are that you were right, but it can take longer than you want, from permitting for that area to develop. It takes time. And I think that that's where I'm at, is that we all have to have a low time preference. You got to be willing to kind of wait. We're buying like local real estate down, called Bitcoin, down in our local town, that over the next 15 years, we're going to make a fortune on because the inflationary tailwinds. But if you're trying to like think in the next 6 months, is this going to pay off and go to 400,000 Bitcoin? Like I have no idea. And I hope VJ's right, but I have no idea. But I feel very confident that over the next 5 to 10 years, this will be probably the greatest asset class going. And to your point, I think that back to the macroeconomy, look, you combine the Ray Dalio credit cycle stuff, the Lynn Alden stuff that she's done, does great work on that. Like, things take time. There's a confluence. It's complicated. For instance, M2, yes, it has declined, and you saw like gold miners get hammered on that front, and Bitcoin go down. But the reverse repo market is the backdoor form of liquidity that really just keeps the game going. What we are all clear on is that this has been a 50-year party with debt globally, and we are maxed out with debt. we are playing games, shuffling chairs and reverse repo and rates. And that, to me, it's laughable that we all sit here like, what's the Fed saying? Oh, they're going to cut rates.
Yes.
Okay, then I can come back outside and play again now. Like, if you
Yes.
think about it, we're going to look back
It's
in
like Hunger
20
Games. Yeah.
we're going to look back and laugh and say, this is nuts that the markets were trying to see what 12 people in Washington were doing and whether they could come by stocks. It reminds me so much sometimes of the '07 and stupid stuff you saw in the world of markets in '07 before great collapses would happen. So to round out to your point, so I don't know when that next crisis is. I mean, we probably were on to that in March of last year with Silicon Valley Bank, but then they come back with the BTFP program and cover that up. And so they're patching that up with a little Band-Aid. And so they can do this for a while, but like ultimately, if we're taking an 8-year view, and we should all think of it as we're commodity investors here, we're going to do very well over the next 5 to 8 years, perhaps much sooner. But markets are going to market, and right now, to what I observe, is the stock market is rallying on the 10-year Treasury coming from 5% down to under 4.5%, and possibly on its way to sub 4%. So okay, it's safe to come out and play again, party on. I think what they're missing is how fragile the system is. What I see is fragility. Like, I see a leveraged system everywhere, just like you had in '07 at the banking level. This is much more spread at the sovereign level. But yet the system remains very fragile, and volatility. Like, I don't know if I can share a screen, but to show charts to your viewers. But there's so many great charts. If you look at the S&P 500 just over the last year, it's like the Alps. Like, there's massive, whipping around, and that's true of Bitcoin too. And the reason why is because it's algorithmic trading and leverage that creates a fragility in the system where everyone is kind of all in on crowded trades. And what happens is when you get some black swan, all of that stuff unwinds quickly and rips apart fast. So I'll pause there so I'm not being long-winded on too many tangents, but I don't know if I'm answering your question, but there's just fragility, but it can take time. But we're not wrong. Over the next 3 to 5 to 8 years, we're going to be very right. I think the probability on that is well north of 85%.
And if you can, I think you can share your screen possibly. If you want to, you can try it. I think I enabled it, so it should be good if it can pop up. In saying that, I was going to talk to James last week, and then we couldn't, and then I was going to talk to him at Vegas, and then he couldn't go.
Yeah.
So yeah, so I won't go too far down. He's obviously been making the rounds talking about bonds. Obviously, I'll end up talking to him probably the next handful of days here about that. I can deep dive with him a little bit more about that. But what like where in that world, just I guess maybe your view, or just kind of the macro on that for just a minute, where are we on, I guess, not only bonds, or give your thoughts on that, because you kind of just mentioned that. That's why I was thinking of him, but also that leading into the ETF, and it's kind of similar but not a segue into some of those things, the Bitcoin ETFs. But the big thing was, I guess, to make it a more pointed question, the bond market. What is it in the last month? And I don't have the chart up, but like the last month, did we go from 5% all the way down to like 4.2 in the 10-year or something like that? It was just. I mean, this is like unprecedented to see this, isn't it? Just the amount of like the speed at which the bond market's not supposed to be doing that, right? I guess that's the big thing.
Yeah, it is. So if I just pull up Bloomberg, the blue line here is the S&P 500. This is looking back to 2021, so going back 2 years. Blue line is the S&P 500. The white line is the 10-year Treasury yield, right? So, and look, what's interesting to me, like, let's just look back over the last 12 months, right? So here was the Treasury yield bouncing from 1.29% back in October of 22, and rates started to increase. Stock market was kind of climbing a wall worried. Then it got worried when we hit about 2.5%, started to decline, kind of was sideways stock market, the white line, as rates kept rising. Now look at what happened here. When you got to about June when you got to the 10-year Treasury then kind of flat 3.5%. Stock market kept kind of climbing while worried. So the blue line then, if we got to July, the blue line, the S&P 500, that July through October sharp downturn was because rates blew out from 4% to 5%. And it's almost like when Bill Ackman tweeted that he was no longer short the treasury market, we top ticked it, and treasuries went from a 5% on the 10-year treasury, 4.99 on the 10-year, and we went right down now to 4.17 today, I think. But look at the S&P 500,
Wow.
right with that 5% top tick, boom, the S&P 500 took off. So it's a little like, people say, well, where's the stock market going in the next 6 months? And my view is like, well, if I were oversimplifying it, I'd say, and ignoring any black swans that come up, tell me where 10-year treasury is going. If this is going to 3.5%, like Felix Zulauf thinks, who I think is a real smart guy, like, yeah, this S&P could jack out to 5,000, 4,800, 5,000 easily, and you got another rip. If rates are going to turn back around because of inflation or some fear in the U.S. Treasury market, well, then this stock market's going to go south again. So that's the most important thing I'm watching right now is 10-year Treasury yields. And again, that's oversimplifying it. The world's more complicated than that. There's black swans. But like, to me, that's interesting. And I think that if we just quickly go into the economy, sorry, let me go up to, let me just pull up this old chart. I'm pulling up my Bloomberg charts. What I also think is interesting is, like, if I look at back 50 years, and I'm looking at, and this is a busy chart. This is the white line here is the federal funds rate from 1970 to today, right? So let's just walk through the Fed funds rate of the last year, right? Here's the Fed taking the white line, the Fed funds rate up to 5.3%, all right? And blue line is the stock market over those 50 years. You can look at how big of a bubble. Gold is the gold line. And I should take out the NASDAQ, it's getting busy, but I threw the NASDAQ in there yesterday when I was talking to someone. That's the orange line. But if we look at kind of gold and the S&P, the first thing I always observe is look at how the stock market has blown away gold over the last 15 years. Now, that to me is why sound money assets and commodities are really interesting. Jeff Gundlach has great charts on that of the stock market has just gotten so far away from the commodity indices that's where there's great value right now in the commodities, including Bitcoin as a commodity. It's a digital commodity is how I think of it. Gold is a physical commodity. It's a sound money metal. And I think that what I want you to observe here, though, on the white line only, all right, and the red shades are recessions back to 50 years. Every time the Fed funds rate was increased in the early 70s, it ultimately leads to a recession, and it makes sense, right? The cost of capital goes up, people slow down their spending, the economy's 70% consumption, we hit these recession pockets. That happened in the early 70s, that happened in the late 70s to 1980. We had a double dip recession because Volcker had to jack rates to 20%. Literally, mortgages were 20% in 1980. But debt to GDP was only 35% back then. He could afford to do that. But then we had, I would argue, 1980 through 2008, interest rates, white line, Fed funds rate came way down because inflation was low, because we had Microsoft and Intel in the 80s, the internet in the 90s driving efficiencies, and China in the WTO in 2000, and the Walmartization of America, where Walmart could just make plastic stuff in China cheap, sell it to us cheap. And we had things like shale oil production. We had a great period of deflationary forces that kept rates at bay and allowed this debt party to go on that I talked about earlier. What I notice now is the Fed funds rate, kind of look at even in 05, actually, they were jacking rates to pop the housing bubble in 03, 4, 5. Then they flatten out and pause. And it's only after the pause that the recession happens. And then they have to cut rates massively. And here's Powell in 2016, after he takes the baton from Yellen. He's raising rates, but then the repo market rather starts to break down. Boom. He had to cut rates then because also he had to pause rather because the repo market was breaking. And then he ultimately had to cut because of COVID. And we had that mini recession. And it was only mini because they threw so much money at the system. All right. Here we are today. The Fed has jacked rates aggressively. Here they are pausing. And you got headlines in the Wall Street Journal and Bloomberg saying, they did it. It's a soft landing, And I laughed at myself because it's like, okay, I think there's a probability that's more than 80% that we're going to have a recession, another red shade. They'll be forced to cut rates massively in that because we are so tied to leverage in the global economy, that the higher rates matter. They will cut rates aggressively. And so I think you could see stocks take one of these another nosedives before they jack back out again. And to round it all out and final point, this is where I think Larry always talks about Gresham's law kicking in, that on this next one,
Mhm.
when people see the Fed throwing money at the system, I think most people will conclude they have no choice. They can never, ever take QE permanently away again. They will always, we are addicted to debt. And that's when you see people start diversifying more and more into sound money assets, gold and silver historically. I think those will perform well. I think Bitcoin as well will all do very well at that moment. So I've been long-winded here, but to me, this is an interesting walk back of 50 years looking at Fed funds rates and Fed cycles, their impact on stocks and on commodities like gold. And I think what's ahead is everyone's forgetting that once the Fed pauses, it's about 3 months later, 4 months later, that recessions begin because of all of the damage they've done from that rapid rate increase. And I think that's still to come kind of as we look out in 24, 25. I don't know when that plays out, but I think if I were betting it sooner, like I'd take a good bet that in the second half of 24, there's been some challenges in the economy, but certainly a very, very high probability by 2025. We're going to have paid the piper for those rate increases and for a 50-year debt orgy, effectively. So I'll pause.
No, I love that you had it all laid out there, Dave, because that's you see over time. I think people see that chart, but it's, maybe the recession lines with the Fed funds rate, and maybe that's it. I love that you had gold on there. You had so many of the different overlays, which I don't think I've seen all the overlays. Was that inflation adjusted or was that nominal?
It's nominal. That's
Nominal,
nominal.
yeah.
Yeah, not real. Yeah.
Man, that is wild just to see that really all overlaid together and how it's all coming together. Like, can we get to 100? I mean, there's another, I think a while, like months ago, I don't know when it was. I tweeted something out or it was somewhere. I made a comment somewhere, and I don't think it was like Bitcoin Twitter even. So I got a lot of people are like, are you kidding me? Or like whatever. And it was like something like the dollar can fall, another 99% in the next 10 years because it's fallen 99%. I think it was like Facebook or Instagram. So that's obviously more of a personal network that you have. And then you have Bitcoin, Twitter, and some of these others that are more general networks that kind of expand outside that. But yeah, my Instagram and Facebook or whatever it was. And then people were like, what are you talking about? Like, there's no way. And I was like, not only that, I was like, you'll probably be at 50 trillion. We could be at 100 trillion in debt, maybe by the end of the decade, and the dollar losing another 9, and people just their minds exploding, couldn't understand. And I think that's where, like, you look at it and you're like, how does the average person not look around you? And like the Senator Warren tweet like yesterday, or like, I paid $50 a semester, and I know that's because you're in Massachusetts, right? You guys are there,
Yeah,
correct? So yeah,
she's our
yeah,
great senator.
so that's a whole another rabbit hole we could go down. Holy cow. But it was like, with the things she's done recently, but that tweet and it's like, I think I tweeted back at her, and it wasn't to her necessarily. It was just like, how does the average person not look around them and be like, if we keep doing the same thing, why don't we try the exact opposite of that? A deflationary or a neutral money that captures deflation instead of an inflationary currency we're using. It just like blows me away that people just don't even like, oh, wait, what's going on? It's taken us decades and decades and decades, so long. But I mean,
but just to pause on that point, you know what I think it is? I think that, and by the way, like, Senator Warren was my wife's law school professor, and my wife says that she's still the scariest teacher she ever had, and
oh boy,
and she's the most ambitious kind of, just an ambitious person. I think that there's a lot of things we could go into that, but I think what you're describing is, I think that old saying, ignorance is bliss. Like, let me just put my head in the sand and ignore the noise of the world. Because like you and I were just talking in the beginning, like we each have young kids. We're trying to raise families. We're trying to juggle jobs. My wife and I are buying the kids a dog for Christmas, so we're even nutty that way, where we're about to have more chaos in the house. So, but the point is, everyone's got family chaos. You got life chaos. Life happens, and God, money's stressful. And so therefore I don't want to think about it. So, my sister always teases Larry when she goes to a cocktail party and says, Larry, whatever you do, don't talk about gold and Bitcoin because you're going to depress people. So Larry and I always laugh at that. And it's true, right? People don't want to talk about the pain. But to your point, I'm going to share the screen again.
Yeah.
I think, my partner James Lavish just posted this today, right? And everyone's seen it. This is the Federal Reserve, federal total public debt. And from the 1970s, down, well under 1 trillion, kind of compounding massively into 2000, compounding massively into '08, that recession, bailing out the Wall Street. And we all thought that was a lot. Like, that's child's play from what's happened over the last 15 years. And yes,
Remarkable.
some old Uber bull might say, "Oh, you Bitcoiners, you're always doomsdaying. That was COVID. It was a one-time thing." And I think what they're forgetting is a couple of things. One, ignorance is bliss. They don't want to talk about it. They don't want to think about it. It's just easier to say, my Merrill Lynch broker put me in these ETFs and I'm making money and that's all I know. And that's worked for 10 to 20 to 50, 40 years. That has worked. What they're ignoring, though, is the law of compounding and how painful this can get when you have debt like that. And to your point, Brandon, when a recession kicks in, easily you could see numbers like you just talked about, where this goes to 56 trillion over the next kind of 4 years, literally 4 years, if this is a more than a mild recession. And I could quantify that by saying that, based on where Social Security and state unemployment benefits go, all sorts of basically the safety net payments during recessions, we could easily wake up where that number's going to 56 trillion again in 4 or 5 years. And so, yeah, and then if you throw on top of that a rising interest rate environment, and the I think the average 10-year treasury going back to the late 1800s is 4.8%. So you could argue we're at normalized levels on the 10-year treasury. But I would argue, but we're not at a normalized federal balance sheet globally. We've had 50 years of excess debt. And that's also what I think people are missing in markets right now, is that they think the 40-year playbook of the Fed's got your back, they cut rates, they'll bail it out. They're ignoring this chart. They're ignoring how it is growing exponentially. And as any great mathematician, of which I am not one, but they'll tell you laws of exponential growth, they can explain to you better than I can. It just compounds massively and blows up on you. I think that we'll look back 20 years in history, and this is the type of stuff we'll talk about. Ignorance was bliss. People didn't understand exponential growth. And then people ultimately, one thing I want to talk about on Bitcoin is, so again, round, simple numbers. At the end of the 1970s inflationary period, sound money assets, gold and silver really at that time, just isolating to those two, they got, you'll hear mixed numbers, but generally we're all saying in the same directional thing. Like, I've heard Dalio say that it was like 7 to 9%. Gold and silver were 7 to 9% of sound global financial assets at the end at 1980, call it. Well, if you look at gold, silver, and Bitcoin today as sound money assets, we're only at 1% roughly, maybe just under that, of global financial assets. Roughly, in round numbers, you'll hear different numbers, but it's close to this $700 trillion of global financial assets. Half of that's in real estate. Half of that is in stocks and bonds. And gold and silver and Bitcoin are less than 1%. Now, if we have just simply a 1970s style global chaos with inflation, well, and again, debt to GDP was only 35% back then, and China really hadn't grown yet and levered up their balance sheet, and Europe hadn't done what they've done with their balance sheet. Like, boy, we're massively undervalued. That alone is what gives me great confidence when I hear Michael Saylor throw out $1 million per Bitcoin in like 7 years. Like, part of me at first used to be like, wow, that sounds a little aggressive. And then like I run through those numbers and you're kind of like, he's not crazy. Like that makes, I can see how he justifies that argument, because we simply need to see something where we see global financial assets, where sound money assets become, call it 8 to 12% of global financial assets. And again, that's only if it's 1970 style. If this is something far more chaotic because of that debt that we just talked about and the exponential growth, I mean, perhaps we end up this time at like a 20% sound money assets at 20% of global financial assets, or more like 30% of global M2. Like, that's where you could play with numbers, where you can see gold, silver, Bitcoin being massively outperform every other asset class in the world over the next 5 to 10 years. So again, I'm talking my book. That's why Larry and I, for instance, are diversified across gold and silver miners and Bitcoin, and James and I are involved with the Bitcoin Opportunity Fund. That's why we're positioning our wealth and our clients' assets toward this space. We think over the next 5 to 10 years, the probabilities of us being right are very high. There's no guarantee
Yeah.
in life, but I think that's why if you can have a low time preference, this is like Jeremy Grantham up here in Boston, another guy I admire a lot. As he has said, the great fortunes are made in commodities investing. And the reason why is because if you can take an 8 to 10 year view and ride a cycle out and ride those tailwinds, your average working stiff money manager at a mutual fund cannot do that. They have to worry about next quarter's return.
Quarter to quarter. Yeah.
They're high time preference. They cannot be low time preference. If we and our customers can be patient and are willing to ride that cycle, great fortunes can be made over time, we believe. And I think the probability of us being right, again, over 5 to 8 years is very, very, very high. I think even perhaps sooner, but I don't want to guarantee that. I think you got to learn patience, and I'll pause there. I've been long-winded.
No, I think that, man, it makes me think of so many things there, David. It's like, it makes me think of Jim Rogers, obviously, like just that's a very similar, ethos. Obviously, it makes me think of Mike Maloney, who was one of the people that really, I don't know, 12 years ago, really got me into this space, sound money, understanding what money was, that dollars were just claim checks. And it makes me think of he has some mathematical breakdown of how there's 1,000 times or 10,000 as many times of potential for commodities to grow, gold and silver, stuff like that, Bitcoin as well, because of that. And you kind of laid out, I think half of it, which was, China wasn't about, what 40 years ago, there was only like a handful of countries that could even be in gold and silver. You couldn't even, it was just such a small market. Now everyone's got gold and silver. You can buy anything on your phone now. None of that was available 40 years ago. So you had this run up in gold and silver, for instance, where it's 1,000 times that, a 10,000 time, marketplace that can go buy those things. And we just didn't have that. And that's where.
And just to drill down on that, because I think it's a great point, Brent. Like Larry and I talk about this a lot. Like the Bitcoiners, some will attack us and laugh and say, well, what are you doing in gold and silver? That's a dinosaur. And we kind of chuckle because we're like, okay, there's a contrarian bull sign right there that people are mocking us. Number two, I think you can be a Bitcoiner, and we are too. We've said it. Paul Tudor Jones is right. It's gonna be the fastest horse in the race, but you're at at your own risk to ignore the flows of capital by the central banks globally, particularly the global South and East. They are buying massive amounts of gold. You are ignoring silver supply and demand, where things like the Inflation Reduction Act are driving solar adoption throughout the world massively. And silver is a critical component in solar technology. And gold and silver have been underinvested in on the supply side massively over the last 12 years of this bear market. And so you're going to have a supply shortfall as the demand from things like electric vehicles and solar drive silver demand over the next 7 years. So you can choose to laugh at it, or you can choose to look at flows and look at supply and demand and tailwinds and say, boy, there's an arbitrage there, and I want to take advantage of that. And look at the flows of central banks buying gold. On Bitcoin's case, I think Greg Fossil, who's an advisor at the Bitcoin Opportunity Fund, always talks about this, and I think it's a great point, and it's what you just said, Brandon. 80% of the world has cell phones. And the beauty of Bitcoin now is you don't need to establish a bank account. You can buy and own Bitcoin no matter who you are in the world. It's one of the things that resonated to me about Bitcoin ultimately is how fair it is for anyone in the world to participate and grow their wealth and protect their value. Like, what a wonderful thing, right? You don't have to just be a rich Argentinian that can get a Citibank account down there to protect your family. You can be your average Argentinian and have a phone, and you can protect your family and store value in Bitcoin and protect, the savings for that family. Like, what a wonderful, wonderful thing to the world. And I don't want to be too long-winded, but I think that, as Greg points out, the whole world will have access to buying Bitcoin. And that type of demand globally against a scarce asset that only gets more and more scarce every 4 years. And when there's only about 2.5, million coins on tradable exchanges, there's a massive wall of money that will come chasing this, not just from BlackRock ETFs, but indeed throughout the world. And I think that that's ultimately what will play out, but it takes time. These things don't happen in 6 months increments. They happen over 6-year increments. If you can have that view, boy, fortunes can be made.
I think that's you made me think of something earlier I want to touch on, which is the demographics in twofold here, which is the demographics of why your thesis is going to be right, I believe, in my opinion. And a lot of it's because of demographics, right? The changing demographics of the 70, 80, 90-year-old demo. I don't know what generations you necessarily call that. I don't know if that's maybe silent generation even, but they're retiring, they're passing away, unfortunately, and that capital is going somewhere. And that's, you're going to this younger generation of folks who are they're not going to be looking at things as the previous generations did. And that's where, like you said, everyone on a phone, whether it is even gold and silver now or Bitcoin, like people can buy those things immediately. They saw the older people in their families get crushed, what, in '01, in '08, in 2020, and they're like, hey, I'm out. Like, I'm out of the system. Like, we're doing something different. That's why I think, again, that 1% allocation to commodities is going to go probably to 10, 20% or more, even, because people they're fed up, it feels like. And I think that's one of those big reasons why you're gonna have this huge shift. So, like you said, Harry, was it Harry Dent? Can't think of his. I'm having a
Yes.
yeah. My mind's all over the place now. I don't know why I
Yeah.
can't think of his name. But anyway, his big thing is demographics, right? And demographics is destiny. And I think that's why you're gonna have that play out massively. So it's
I think that's
underlying your wave of what you're talking about.
I think that's right. And just one other chart, and it really goes back to what you were talking about earlier, by the way, on the M2 money supply. So just one, again, I hate to bore people, but I think in pictures. And so when everyone hears
Yeah.
Michael Saylor talk about why did Michael Saylor get involved in Bitcoin right here, I just want to walk through this. This is the M2 US M2 money supply year over year growth since 1970. And if you look at it, this little number in the upper left corner is average over those 53 years is 7%. So the US money supply grows at 7% on average. You've heard Saylor talk about this. And so everyone like, oh, CPI yesterday came down to 4%. Oh, okay, the Fed maybe solved it. And it's like, I laugh because it's like, no, an Austrian economist would tell you this is what matters. Money supply, year over year growth. It grows at 7% a year on average. Now, as Michael Saylor has pointed out, when he saw this money supply growth of 20% plus per year in 2020, 2021, that's when he said, I got to get MicroStrategy's treasury cash into Bitcoin and avoid this debasement. This is unbelievable. And then, as you pointed out, Brandon, earlier, look at the M2 money supply coming down over the last 2 years. Now, let's I don't want to complicate, but if I overlaid the stock market on this, you'd see gold, silver, Bitcoin, and the stock market kind of getting jittery as the M2 money supply came down. As we all know, we've lived that in the last few years. What I would propose to you is that given the debt, given what happens during recessions and safety nets, as Luke Roman has written a lot about, the probability of this thing going back up to like a 15, 20% growth rate, if not higher in the next crisis, whenever that is in the next handful of years, when that one happens, like that's what, Larry and I've talked about, that's the big one. That's where, it's like the old Sanford and Sons. This is the big one, Elizabeth. It's like, that's the big one where it's like, I think Gresham's law, people will realize, oh my God, those crazy Bitcoiners and those crazy gold bugs, I see what they're saying. Darn it, I've got to have 15% of my assets in that space. And suddenly, boom, you've got that wall of money we're talking about as everyone in the world is picking up their phone and opening a Bitcoin account and buying it, as everyone starts buying gold and silver, and that's, again, I don't know when that happens. It's hard to know, but I think the probability over the next 5 to 8 years is incredibly high, and over the next 3 is still very high. And so this is that M2 money supply chart, though. But what Michael Saylor has pointed out is like that's what got him into Bitcoin. But again, to me, what's always fascinating is the 7%. That's massive amount of inflation. That means, every 10 years, your store of value of the dollars you held just got cut in half. You've been debased. That's the inflation. That's why Elizabeth Warren paid $50 for a, for University of Oklahoma or wherever she went. That's inflation, and that's why we're here. And so I don't think it's wise of anyone to go put 100% of their assets in Bitcoin, gold, silver, or real estate or the stock market. I think you got to get back to first principles of diversification. But you need to have these assets will help your portfolio in what I think has the great tailwinds over the next decade. So So I'll pause there, but I think all interesting stuff to me.
Yeah. Well said. Well said. Do you have a few more
Yeah,
minutes? I know
absolutely.
you're awesome. There's so many things, and well, at some point we'll have to do this again too and dive into even
Yeah.
other stuff. But there's so many, and you maybe keep thinking of all these other stuff. But the history, and the other thing too, I was thinking of demographics, and this is why I love. I don't know if I've told you this before, but it was Bob Burnett. That's what I was telling before. And I can't stand like which you're not a boomer. You're end of the Gen X, correct?
Yeah, exactly.
Yeah.
1973, I was born. Yeah.
Yes. And I can't stand the okay boomer. I mean, I'm 36. I don't know, in the middle of the millennial, or towards the end of the millennial, and or I don't know how you say it, beginning of the millennial, I guess. But I can't stand the okay boomer thing. It's this weird thing in society, and I get where it comes from. You always have this generational divide. I get it, it's human beings, and it's exacerbated by the ailings of the fiat system, and like I get that. But what you said earlier made me think of this too, was people putting their head in the sand and discounting, people like the Larrys of the world, even Charlie Munger and Warren Buffett, some of these people that I don't agree with everything they do or say, but to not take the wisdom of older people and what you've seen. That's why, like, I thought us when you were saying, yeah, Larry and I look at each other and we laugh. It's like, oh, you young people, we were all young once. And it is true, like the sage, advice or wisdom that someone has who's seen these different waves, like these things you kind of point out. You've lived through those things where the average person really investing probably right now, or not the average, but a lot of the younger generations, they just don't know what they don't know. And I think that's a scary part in and of itself. So you have to be careful, and you have to look to your elders and say, hey, what do you know that I don't know? What have you seen that I haven't seen? I think that's where, whether it's Bitcoiners or just,
Yeah.
the average stonk guy on Robinhood or whatever on meme stocks. I mean, that's where it's like, man, this is at some point, like I was thinking earlier, you're going to have to print the next time, 20 trillion next time, instead of, we have like what, a couple trillion, a trillion or two in '08, and then, or a little less, and
Yeah.
then,
I
then
mean,
10 trillion or 10 trillion. Now it's what, 20 next time? Where do we
yeah.
go from here?
Well, around real rough numbers, I think Roman's done a lot of good work on this. So if you call GDP 25 trillion round numbers, right? During your typical recession, your deficits will blow out because you got to start paying unemployment benefits, and you don't have the tax revenue coming in from stock market gains, and you don't have corporate tax revenue coming in.
Mm-hmm.
You can blow out to as much as 25% of
Jeez.
GDP in deficits. And so do the math. Again, I'm really going with simple round numbers.
Yep.
Well, then if we're talking about a $6 trillion area, $6.25 trillion, 25% of 25 trillion would be about 6.25, if I'm doing my math right. You're talking about $6.25 trillion deficit. Well, it was 2 trillion this past, run rate right now. It was 4.5 trillion, I believe, in 2020. So now we're at 36 trillion of debt on that chart we talked about earlier. That will now go to 42 trillion. And as I talked about the exponential growth, yeah, we could easily compound then over the next 1 or 2 years after that, coming out of that recession. And God forbid if there's bailouts. God forbid if we're bailing out pension funds, which likely, in my opinion, now we're talking about more than 56 trillion of. Can you feel it now? Like Bitcoin, like now suddenly Michael Saylor's not some crazy guy saying $1 trillion big. And now suddenly that 1% of global financial assets that gold, silver, and Bitcoin are at, maybe it is at 8%, like it was in 1980, where gold and silver were 8% of global financial assets. Like, I mean, again, I don't know. And to back to your point, like, I think we're all busy people in this world with our jobs and our families. I think YouTube is one of the best tools ever, because I can get smart listening to guys like you, Brandon, and your pods, or Michael Saylor, or Lynn Alden, or Neil Howe. And if I were telling people over the holidays, if they had time, although you probably need to recharge your batteries and get away from stuff, but like, I would listen to Neil Howe and the Fourth Turning on YouTube, because you don't have time, or go to just fourthturning.com or whatever that website, just study it. 80-year cycles. Listen to Ray Dalio on YouTube videos on the credit cycle if you don't have time to read his tomes. Read or listen to Lynn Alden. Listen to Michael Saylor. When you tie it all together, you realize that, yeah, we this all just rhymes. We go with cycles, and we're at one of these fourth turning moments where, we're fighting over free speech on university campuses, and whether professors and the president of Harvard are right, or the people that are Jewish that are deeply offended, and understandably so, where they say,
Mm-hmm.
Jesus, they won't stand up to genocide of Jewish people, that's not,
Yep.
that's not saying fire in a movie theater. And as the Supreme
Yep.
Court justice said, it's like pornography. You know it when you see it. There's a line on free speech, and I'll defend free speech till the death of me. But
Yep.
boy, there is a line where it's like you can't cross and say I'm going to have genocide for a group of people. And for Harvard, not a professor and a Penn professor and an MIT professor, not to be able to think on their feet and answer that, and to watch then this whole tension and tug of war go on at these universities. Well, here we are, because I can predict what's going to happen. That Harvard's donations are going to go down. Supposedly they've gone down $1 billion in the last 30 days. They're going to go down probably a lot more, and that's sad to see. I live up here. I'm an alumnus of the business school there, and I don't want to see that. And yet it's a sign of bad leadership. And so many of our organizations and institutions are led by bad leaders. That's what happens in fourth turnings, as Neil talks about. We're in these late cycles of a credit cycle, of a turning. And that's where massive change now is about to happen, when things come unhinged a bit. And that's what brings about these changes over the next decade, right? And that's where, all these things will transpire, and things like, Bitcoin and them have these Gresham Law moments, and more capital flows to these asset classes. So I'm going off on tangents here, but again, to me, if I were advising someone, I'd do YouTube videos on those people I've talked about, connect the dots, think about it, diversify your portfolio. And yet we are in this asset class that's really intriguing, I think, over the next, 5 to 10 years.
And you hit on so many good things, David. Honestly, it's lightning round, I guess, the last handful of questions or so. Quick thoughts on a few things, but I just think of, you're in Massachusetts. It's a home of really America in a way. You can make a big argument for that. Obviously, that it's really the genesis of where people started coming over, obviously. And you think of like the Battle of Concord, you think of so many things that have happened there, and what's going on now. And I think of the founding fathers, and like this experiment's not going to work unless there's really a religious, moral, ethical people. Unless you have meaning, you think of something bigger than you. Like you're not the center of the universe. And I think of that, like you said, people not being able to think on their feet, doing things for the wrong reasons. Getting to a point where we accepted fiat, and then fiat just destroying the rest of the system. Yeah. It's tough. You're going to have these situations where people are just they're completely for the wrong things, and then can't even see it in of that. And then the rest of the society has their head in the sand. This is it. This is the fourth turning, and you nailed it. We could do a whole episode on that.
Well, and I think we as a people need to just get back to being fair-minded. And again, pardon the sports analogy. I know you like sports like I do.
Yep.
But just being like an umpire, calling balls and strikes, just calling it fair. Like I'm on a group chat text chain with my business school classmates, and so you'll hear some of my Jewish friends there that are very upset about Harvard's reaction to this. Understandably so, absolutely. Mm-hmm. And I have some African American friends that are like, "Well, hold on, this is the first Black woman president in Harvard's history. Why are we going to turn around and fire her 6 months later? We've made such strides on diversity, equity, inclusion." Now, look, most people might say, geez, DEI has gone too far. And yet I'm sympathetic to the Black people that in America that would say, well, hold on a second. Like, why? But I was proud of that. Nerds, I think we have to be understanding of everybody. But I think it's our job as asset allocators, and that's all of our responsibilities for our families and our clients, to say, look, where are the probabilities going? Where's the tailwinds going? What comes next over the next 10 years? Again, we point back to this, but I think in these fourth turnings, yeah, these are where America and the world historically, we come unglued, and it is tied back to unsound money, and it leads to this wealth gaps and people frustrated, and yet at least I try and do, and I'm good at it some days probably not. Like, we're all human. I make mistakes, but you want to try and understand everyone's side. The Jewish people who are upset, like Bill Ackman in this case of Harvard, and I thought he had really interesting tweets last night on that. Understanding kind of an African American friend of mine that's upset about, well, Harvard just has and I see it all, and yet you can see then I see the crowd that says, oh my gosh, this DEI thing has just ruined academic campuses. They have a voice too. Like, they're not wrong. Like, we've lost sight of just calling balls and strikes, of being even keeled, of doing trading horses in Washington where it can't be 100% your way if you're a Republican or 100% your way if you're a Democrat. You got to find middle ground. And that's usually where we get to after crises is we're forced to then make decisions. And those are those fourth turnings. And so that's what I observe is we're in a fourth turning and these are the crisis moments that we have, like we're witnessing in the universities in front of Congress in the last week. And this is then what happens. And eventually Gresham's law kicks in and money starts to move into undervalued asset classes like the ones we've talked about with sound money. So I'll just pause there, but something you were saying was resonating with me on
So
that.
good. Yeah, it's so good. So good. We could do a whole thing, a whole show on that. And maybe we will at some point. Thoughts on in a handful of things to wrap here in the next 5 minutes or so. What thoughts on ETF, Bitcoin
Yeah,
ETFs?
look, I think that January 9th, I think, and April 15th are kind of the next two windows. If I were a betting man, I'd say April 15th, January 9th after the new year, probably be too soon. I could be wrong. I think April 15th, I would expect a high probability that they get approved, that BlackRock, again, has like a 98% hit rate where they don't move through these ETFs unless they probably had a wink and a nod from the government.
Mm-hmm.
I'll admit I have a 2 a.m. fear sometimes of, is there a chance that BlackRock kind of was working in cahoots with the government and went through with this along with Fidelity and others, and yet we're given kind of false hope, and then the government's just going to rug pull and say no on April 15th, and you're going to watch Bitcoin tumble. I have to worry about those things because we're managing money in the space. So
right.
I'll have a little bit, but I don't think so. I think then what I come back to in my head is the Grayscale lawsuit that I think kind of really shows you that the SEC probably is aware that they need to go forward here and make some approvals. This is wholly unfair that you won't allow a Bitcoin ETF when they are following all the rules and regs. You've allowed a Bitcoin futures ETF at the SEC. So I think there's a high probability, I'll put it at over 80%, 85% plus, that by April 15th, we have an approved ETF. I think then Mark Yusko has laid out some great math on that, where out of the 30 to 40 trillion dollars of RIA money, if only 1% come after this space to diversify in it, because it's easy in a heartbeat they can turn exposure onto Bitcoin. And we've all seen the charts, the benefits of diversification. If you even just had 1% of Bitcoin, your portfolio is more sound. I think that there's $400 billion therefore coming into the Bitcoin space alone, and it's an $800 billion asset class. More likely it's like 5% ultimately will come in over the next couple of years. And so that's more like much higher levels of money, like over $1 trillion, couple $1 trillion perhaps will come into this space. Again, what everyone needs to remember is when you have like 75% of Bitcoin holders that are hodling, long-term holders, there's so few, there's only probably a couple million coins on the tradable exchanges. So it's just a wall of money chasing, kind of call it probably a $100 billion asset class of tradable assets of Bitcoin on the exchanges right now. So yes, I think the probability that Bitcoin prices could go much, much higher sooner than we imagine are very high. But as I laid out earlier, I'm highly confident that over the next 5 to 8 years, like guys like Michael Saylor aren't crazy in some of their estimates of prices. And again, I can run that 1970s math of sound money assets being 7 to 9% of global financial assets. And I can safely say I feel a very high probability that Bitcoin could be at over 400,000 a coin in the next handful of years, right? And I think that's probably too conservative. I think guys like Yusko and Saylor and others, VJ, are probably more closer to fine than I am.
So interesting. In wrapping this, what's the next conference you're going to, and you'll be at mass adoption? I heard that's really good. Obviously, right down the road from you.
Mass adoption is in the spring, and they'll be having another one up here. And Jeff Kassler and his team do a great job on that, and Greg Hoffmeister. And I'm going to Madeira in February.
Oh, nice.
January, I'm working on a couple things too that we're looking at now. I'm just trying to juggle calendars, but most likely January I'll be quiet traveling because we've just got to focus on the portfolio as we begin the new year. And so there's a bunch of backlog of deals that we're trying to get through. So, but starting in February, March, I'll be out there and kind of some of your usual conferences throughout the year I'll be at.
Awesome. Love that. And then last thing, I guess, really is any any cool projects at all? We kind of talked about ego death earlier and 1031 and the different VC things going on, and what you guys are doing. What is there anything you can allude to? Any cool projects you have seen that you could share? Just be like, yeah, there's something really cool coming, or anything in that world at all, or is it all under wraps right now?
Yeah, there's a couple of things that we're working on. I can't talk yet about just because we're literally trying to do diligence and
Mm-hmm.
underwrite it. But yeah, no, like as I said, I think that this whole space of like what's intriguing to me, I guess, of the last is I'm talking to a lot of these MIT engineers, for instance. I'm seeing a lot of guys that were on the Ethereum rail saying, no, this is where the technology is better for smart contracts. And now they're waking up and saying, well, hold on a second. Not only does Ethereum have the challenge of not having a sound money store of value because of, it's centralized, but their servers that they use perhaps are using things like Amazon World Services. It's not a decentralized cloud technology, whereas the Bitcoin blockchain is a decentralized protocol. And therefore, if I were putting my will and my estate on a blockchain and I wanted it securely saved where no one can hack it, not any descendants of mine or anything, well, that smart contract needs to probably be on the blockchain where it's most safely sound. And so you're seeing a lot of these engineers that were using Ethereum now still using Ethereum technology to do smart contracts, but beginning to bring those smart contracts to the Bitcoin Lightning Network and Layer 1. I think that's on the come. And that's ultimately where we'll end up. I think we will look back in 20 years' time and say, boy, it was a lot like the internet, that it takes time to develop, but Layer 1 and Layer 2 and other layers coming on of this decentralized protocol are going to be more and more called into demand. And I think as that happens and the technology gets better, faster, cheaper, and you and I are able to stream value to each other quickly over a lightning, channel, that's, I think, where this is going, where it's not only going to be Bitcoin as a store of value, but Bitcoin transactions. Now, again, it doesn't mean that we'll still perhaps be dealing in fiat, but your main sources of value will be and savings will be in things like Bitcoin and sound money protocols. And so I think that that's some of the interesting stuff. I'm being long-winded, but I think some of the interesting engineering folks that I'm talking to, and technology stuff being built out on Layer 1, Layer 2, Layer 3s, I think that's what's really going to be fascinating over the next 2-3 years.
So amazing. Where can people find you, David?
Yeah, so bitcoinopportunity.fund is our website. So you can go there and
Link to that.
contacts there, and I'm at David at bitcoinopportunity.fund. So people can reach out to me there, and happy to talk to anyone.
Love it. Yeah, we'll link to that stuff and how to connect with you. So thank you so much, David. You've been way over generous with your time. I think we've gone about 15, 30 minutes over what we said.
Pleasure.
So
My
we can
pleasure.
just keep going and going, but I want to be, generous with cognizant of your time. So thank you so much, David. Appreciate it.
Always good to see you. Thanks a lot.
So good.
I really hope that you enjoyed this episode with David Foley today. He is, as you can see, one of the smartest people in the space. Really has a depth, breadth of knowledge that the average person just doesn't have. That wisdom and experience comes with time, and that's something that, as we talked about here today, the younger generations don't understand that. When you don't have the experience and the wisdom, you don't know what you don't know. And that's why I love people like David, because he has a mix of both. He's got the wisdom and experience, and he also has the youthful exuberance, and we need that. We need people like him driving this world forward. Not just Bitcoin, but driving the world forward. So I appreciate you, David. Thank you for being gracious with your time. You're always one of the nicest people in the space. Always make time for everybody, and whether it's at conferences or recording things, whatever it may be, you truly are a wonderful person. So I thank you. Please share this out. Share David's message out. The algorithm hates truth. Question everything with boldness, even the existence of God himself. Trust but verify. This is not financial advice. It is freedom advice. We will see you on the next one.